In today's video, we'll be catching up on the busy news week that we've had so far. United States FOMC meeting was yesterday at 2 p.m. Eastern Time, and their Federal Reserve raised interest rates the expected 75 basis points up to 4%. This morning, the Bank of England released their new monetary policy statement, and they chose to also go with the expected 75 basis point hike, raising their interest rates up to 3%. Swiss CPI numbers were forecasted to come in at 0.2%, but have disappointed yet again, coming in at only 0.1%. The busy news week continues as the U.S. has its monthly non-farm payroll report, or NFP report, tomorrow at 8:30 a.m. Eastern Time, so be sure to check out Trader Nick's live stream tomorrow morning during the news event. Now let's take a quick look at some EdgeFinder pairs. So here we are inside of the EdgeFinder, and we're talking, we've been talking about the US dollar, we've been talking about the pound, we've been talking about the Swiss franc. We had FOMC yesterday in the US, the Federal Reserve raised interest rates 75 basis points. The Bank of England also raised interest rates 75 basis points with this morning's monetary policy statement. And we had Swiss franc CPI come in not as good as expected, only 0.1%.
Black Friday doesn't have to look like this. We're doing our annual Black Friday sale with 40% off store-wide. Our biggest discount of the year on our EdgeFinder, our Discord, our trading courses, and more. There has never been a better opportunity to get in on the action. Use the code A1YT at checkout for a 40% off discount.
But tomorrow, we also have another huge U.S. news event. We have non-farm payroll, so I think that we're going to take a look at another U.S. dollar pair mixed with another currency that we haven't taken a look at this week. And then taking a look at the score chart summary, I noticed down here that gold is our strongest sell, tied for our strongest sell with AUD NZD. So I think it'd be fun to take a look at gold, and in fact, we're going to do that in just a second. We're going to take a look at gold, and then we're going to take a look at one of these strong buys. I think USD CAD would be an interesting one to look at. I know we've looked at the US dollar a few times already this week, but it's good to stay up to date on all of this information, especially with all these news events going on, just to see where we sit currently and how the news is going to affect the market. So we're going to take a look at gold. So I'm going to click on that and bring us into our gold breakdown page. Now, if you're not familiar with the EdgeFinder or you've seen the EdgeFinder but you haven't checked out one of these videos in a while, we have a brand new gold page here. This is a brand new gold page that we updated just last week with some cool new features over here, along with this new layout. And it just makes this gold scanner so much easier to read. We can see. I love these arrows. These arrows make it so simple to understand, like how different parts of the market will affect the price of gold and things like that. So we're going to get to everything in just a second. But we can see here gold has a strong sell bias score of -8. Our COT data is actually a neutral score at the moment. And we can see that institutional traders are 59.51% long and 40.49% short on the pair. So they are leaning towards the long sides. Institutional traders are leaning towards the long side. However, we have our scanner output summary here that explains why we score things the way we do. And essentially, we wait until it crosses that 60% threshold to score it one way or the other, either +1 or -1. So once it's hit that 60% threshold, crosses that, then we consider it to be more heavily favored one way or the other. And so because we haven't quite crossed that 60% threshold, we're giving it a neutral score at the moment. But we could really say that, institutional traders are favoring the long side for gold. Retail sentiment score of -1, favored on the long side as well, with the retail traders 82% long, 18% short here. Seasonality has a score of -1. And so here in November, taking a look ahead, we can see that both all-time and in the last 5-year average, the price tends to go up. Our trend reading is a score of -2, and what that means is that over the past couple days or couple weeks, how has this market been trending? Has it been trending upwards? Has it been trending downwards? Where a score of -2 tells us that this market has definitely been on a downward trend. And lastly, GDP growth, inflation, unemployment, and interest rates all have scores of -1, and we can take a look at that right over here. So this is the coolest part about our new gold scanner is these arrows and this data here and what this means. So essentially, typically speaking, if the dollar is stronger, gold is not doing as well. People fall back on gold when the dollar is losing strength, and when the dollar is strong like it is right now, people don't care as much about gold, and they're doing things like buying stocks, buying bonds, buying yields, and investing their money in the dollar and not gold. So we can see here GDP growth. If GDP is going up, if the US economy is doing better, that is usually good for the dollar and usually bad for gold. We have this little disclaimer right here. Please note these correlations are not perfect and are instead general observation. For example, if money supply in the United States increases, we have noticed a strong correlation in the rising price of gold. This could change in the future, but is something that we monitor closely. So like I said, typically speaking, when the dollar is doing good, gold is not doing as good. So when things like the economy are doing well, or we're raising interest rates like we just did yesterday, not good for gold. So we can take a look at that here. 2.6% US GDP, 8.2% US inflation, 3.35% US unemployment. And keep in mind, things like inflation and unemployment are not strong for the dollar. You know, if there are more people unemployed, then the economy is not going to be doing as well. The dollar is not going to be as strong. So that is good for gold. Interest rates are at 4%. Of course, that was changed yesterday. And we have our money supply numbers right here. So check out the new gold scanner. You can get access to the EdgeFinder in the link down below. We are doing our Black Friday sale. It is 40% off everything in the store with code A1YT. That means you can get 40% off the EdgeFinder if you're interested in trading gold. This is an awesome tool for you because it gives you all of this information right here. You can take a look at the daily chart along with price forecast. You get the scores so you can tell if it is a strong sell, buy, strong buy. We have our institutional trader data here, retail sentiment, upcoming news events that could affect the price of gold, as well as our US dollar information, US dollar data right here. So check it out, code A1YT for 40% off the EdgeFinder. You can find that in the links down in the description. Now, USD CAD was the other pair that I wanted to take a look at, because again, we have non-farm payroll events coming up tomorrow. I know we've been talking a lot about the dollar, but we're having dollar news events, so it's good to just stay completely refreshed and keep up with all of this data. And I don't think that we've looked at the Canadian dollar yet this week, so this would be a good pair to take a look at. Strong buy bias here, score of +7. COT data comes in at a score of +2. And down here we can see 75.12% long and 24.88% short for the US dollar. So institutional traders are pretty heavily favored on the long side of the dollar. Canadian dollar, not so much, 39.84% long and 60.16% short here. So institutional traders favoring the short side of the Canadian dollar. Retail sentiment overall, retail traders are short on the pair, 84% short and 16% long. That gives us a score of +1. Seasonality here also has a score of +1. We can take a look at November, and historically speaking, last 5 year and all-time average. Last 5 year, a sharper downward trend, all-time average, a slight downward trend here. So keep an eye out for that moving into December. Trend reading is +1, and so a +1 score means that yes, this market is in an upward trend. +2 score would be that this market is like strongly moving upwards, but a +1 score means that this market, yes, it is moving upwards, just not quite as strongly as it possibly could. Lastly, GDP growth, unemployment, and interest rates all have scores of +1. Inflation has a score of -1. And we can take a look at our fundamental section right over here. So US dollar GDP growth 2.6%, like we just mentioned when we were taking a look at gold, and Canadian dollar GDP 0.8%. US unemployment 3.5 compared to Canada's 5.2. US inflation 8.2% compared to Canada's 6.9%. And lastly, interest rates. US has 4% interest rates as of yesterday, and Canada sits at 3.75%. So that was a quick look into the EdgeFinder. Both the USD CAD is a strong buy, gold is a strong sell. Remember, if you want the EdgeFinder for yourself and access to all of this information and data, you can find links to it down in the description below. Use code A1YT at checkout for 40% off this month only for our Black Friday sale. Now we're going to check out some analysis from today's live stream featuring Miko.
For the rest of the week, so we did see a lot of dollar strength, and I was looking for some shorts on gold, Euro USD, Pound USD. Not all of them at the same time, of course, because they're pretty much the same trade. But I was looking to trade it, but because of the news coming out, I did hold back. And luckily enough for me, I would have definitely been wicked out with this move here. So did dodge that bullet, but I still expect more downside for gold. Still looking with the long-term bias back down to 1550. So still looking for a push into this area here. So by all means, I'm not really too annoyed about not getting to gold up there, because for me, I still see a lot of downside. Right now, gold is trading at some critical support where we could see some upside, not really the trade for me. Maybe in the lower time frames, you can squeeze some pips, to the upside out of this move. But for me, I'll be looking to see if gold can come back to some of these areas here. And I'll start looking at shorts right back down again. And if we see even bigger retracement, that's even better for my standard. Another short from up there would be fantastic as well. Or of course, if we do break through this zone, but I'm still looking at 1600. We've hit 1700 very, very well for gold. A lot of rejection around this area. If I just zoom out, you can see this whole area is like the 1700 zone, if you will. But just highlight that 1700 handle there, so you can see support, resistance, and gold does love moving from psychological level to psychological level. So 1700, next stop for me, 1600 just below us there. So looking at more shorts for gold, it is at support, yes. Some lower time frames could be some nice buys from there. Not, like I said, not really my trade. If we can come up, that would be nice. Looking to short it back down again. 1636, 1652 is what I'll be looking at. Anyone else looking to trade gold as well? I see what you mean though with the left head. Left head, right shoulder. That could be a right shoulder, yes, but I'm favoring the double bottom for price to continue, since we're still seeing a lot of momentum in the market. So it could be a right shoulder. And if I do get into buys and we form and it fails, that's the case. But as of right now, I'm still looking at 1.39 for that guy. And there's so many ways to look at the market. Some people will be saying head and shoulders, saying we're going to head down. Some people are saying double bottom, which is me. Saying double bottom, saying we're going back to highs. There's two ways to look at the market. You should have to go for the one that has the most confluence. For me right now, knowing that the higher time frames are still bullish, the price swing low is still being respected. I can see on the weekly time frame momentum still to the upside. We're producing right now a lot of wicks here to the downside as well. So for me, I'm looking at this being another high low on the weekly. So I'm favoring us to continue higher. If I'm wrong, I'm wrong, and we form a right shoulder there, we come back down. I'll take the loss and just look to switch my bias and then get involved in the other direction. But yeah, that is a right shoulder possibly forming. Like I said, I'm favoring 1.39 back up to there. Looking for a move to the upside. Price is still respecting this bullish structure. We're coming in fast into this level here. So you can see if that momentum does die out as a very, very big candle. So yeah, we'll see what type of reaction we can get there. Wait for some wicks, some rejection. Don't look to buy straight away. If that is obviously your strategy, fair enough. But for me, the way I trade, I do like to wait for candlestick patterns, especially when we're getting strong momentum like that. Because either this momentum here is here to fake a lot of people, invite a lot of sellers, and it's going to deplete, fail to break through, and we'll get the higher low, and then we'll get the buys, or is price actually trying to reverse and come back down? So candlestick patterns in here will tell me what price is going to do, whether it's going to A, reverse, or B, break through. And then that's when I'll start looking for my entries. But as of right now, still very much bullish on USD CAD, looking for 1.39 up there. So hopefully that analysis made sense.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the EdgeFinder, you can find that in the description as well. Thanks for watching.